bring in Sacchitanand Uttekar of Tradebulls. He's joining us, and this is our segment Charting Trends. Sacchitanand, great to have you with us here. Good morning. So the market's been at a high, but at the margin there have been concerns that maybe we are running into some amount of resistance because maybe it's just that the gains were so sharp, but the market needs to consolidate. But how are you seeing things?
Good morning, Prashant. Clearly, I think when we look at the weekly setup, there is a good amount of caution which has been indicated by the price and some of the indicators. So I think going forward, what we have observed is that the market could remain more of consolidative. Every time we are moving higher, there's a good amount of profit booking evidence which has been displayed by the market. And on the lower side, it has been trying to defend the 22,000 mark. So I think the immediate range that has been exhibited here is that the support at 22,000 remains, very well built in. But on the higher side, 22,400 could be a supply zone, at least for this particular week. If you look at the weekly setup, if you look at the weekly charts, this is the first time wherein we are getting a very strong evidence of a negative divergence. So probably this is again reconfirming the fact that why after every move on the upside, the Nifty has been facing a lot of profit booking. So if you look at the weekly scale, there's a good evidence of a negative divergence on its RSI. The weekly RSI has started trending below the 70 levels. And the last time when we saw that, this particular phenomena, we saw a very strong surge from the base at around 19,000 up to almost around 22,000 levels. We did not see any major change in stance when it comes to RSI. But RSI right now for the last couple of weeks has been falling. Despite of the fact that the price has been rising. So it's a good indication that somewhere the confidence level of the trend is not that great. So probably we may see the Nifty continuing on the consolidation mode.
Okay, what about individual stocks? Anything that you like in terms of sectors or big trends that you're noticing?
Well, Sonia, I think Nifty IT has already shown a good strong run-up. But if you look at the recent setup, even here, the focus is on the negative divergence. And if you look at the daily scale on the Nifty IT, we have seen a good strong evidence of a triple top kind of formation. There's a good amount of supply pressure at near to around 38,000, 38,500 zone. And this is the first time when on its daily scale, the RSI value is falling below the 50 mark. So I think this is a crucial juncture. Probably we may see the Nifty IT displaying a correction. So we are of the opinion that sooner or later we may see a quick decline in Nifty IT. We may see the levels of around 36,000, 36,500. And after that, again, we may see the resumption of the trend. So right now, I think there is a good supply pressure here. And from the pack, I think Tech Mahindra has been one of the weakest counters. And this is where we are, looking at an opportunity to add some fresh short positions here. If you look at the weekly setup, we saw an engulfing bearish kind of formation at the upper end of the rising channel trend. And this particular formation, post this formation, we have seen a good amount of supply pressure. Even here, last week, we saw a kind of a spinning top on the weekly scale, exhibiting that there could be further weakness. The moment the stock starts trending below 1270, 1265 mark, we may see this particular decline getting extended towards 1200, where its 200-day exponential moving average is also placed. So I think there's a good evidence that any opportunity on the upside should be utilized to create some short positions. Right up to 1300, 1320 would be an ideal zone. Keep a stop loss at 1340 and review your positions near to 1230, 1200 levels.
Got it. All right, Sachi, thanks so much for joining in and giving us that call, looking to create short positions on Tech Mahindra. Appreciate you joining in and filling us in with all of those details. Well, for the time being, though, we'll slip in a short break. You come back, we'll continue our focus on the markets. The markets, by the way, after starting off in the red, have moved into the green.